there, my friends. Ravi here from the Endgame Investor with this week's Silver Report. For the Endgame Investor, we got Ben, Silver Chopper Ben, sitting on the microphone in case he's got to print a bunch of money in the immediate future, which is looking likely given that reverse repos have fallen again this week, and they are down to about $160 billion. This is the home stretch. After that, reserves are going to start to shrink, and we're going to enter another banking crisis. Could be just before Trump takes office, could be just after. Today, I want to open up the Silver Report with something you might not be familiar with, but it is the connection between 19th century drug wars and silver. And I think we are in a repeat of that history today. With the election of Donald Trump, we have with him the RFK regime, Robert F. Kennedy, who will hopefully have enough power to clean up American health and deal with the worst parts of insanity of American culture, led by Big Pharma. And hopefully, with God's help, he will be able to burn down, figuratively, this is not a call for violence, the most corrupt parts of the pharma industrial complex with a reforming fire hose.
You get to drink from the fire hose! Open wide!
I'll show you how exactly what we're going through now is what happened in the 19th century, and it was centered around opium and silver and drug dealing by a big monopolistic elite, exactly like we have Big Pharma now. And where is silver going to play a role in it this time? I believe it will be the collapse of the dollar when silver returns as money, hopefully soon after RFK is able to straighten out the whole pharma industrial corruption complex. Continuing this week's Silver Report, we have $1.4 trillion more debt for China. Silver to commodities is at major technical resistance. We saw what many people would call a dump in gold and silver this week, but it was not. It was a dump in all commodities, which generally happens when you have risk on days. As when Trump was elected, the market decided to go risk on, and risk assets, including stocks and Bitcoin, surged, but gold and silver fell, but not relative to other commodities. That ratio is stable. And in fact, we are at the May 2011 high when silver hit $50 of the silver to commodities ratio, believe it or not. 10-year yields are at an intermediate trend line. The 30-year yield has already broken through, suggesting that the 10-year yield will break through as well, maybe in the next few weeks. The 10-year to 3-month yield curve is on the verge of normalization, could happen any day now. And let's continue with this week's Silver Report, brought to you by the Dirty Man Safe. Use code ENDGAME10 at checkout for 10% off. You'll probably need it because conventional safes are just targets. Store your silver in a bank and you might lose it because the banking system will confiscate safety deposit boxes. Check the link in the description below, and also consider signing up to be my patron on Patreon, where last week we learned why communist regimes always fight organized religion. And speaking of fighting religion and fighting God, we have this document from the CDC from July 2020 detailing how they would have set up medical concentration camps. I'll read one paragraph from this monstrosity, and then we'll go into how silver is related to this and where RFK fits in. Here we go. July 26, 2020, interim operational considerations for implementing the shielding approach to prevent infections in humanitarian settings. What is the shielding approach? There are no names of authors on this paper. They want to remain anonymous because what they are suggesting is basically stripping human rights from everybody.
Who are these sick people?
The shielding approach aims to reduce the number of severe cases by limiting contact between individuals at higher risk of developing severe disease and the general population, which is low risk. High-risk individuals would be temporarily relocated to safe or green zones established at the household, neighborhood, camp/sector, or community level, depending on the context and setting. They would have minimal contact with family members and other low-risk residents. This is the paragraph that really shook me to the core. Social, cultural, religious practices consideration, plan for potential disruption of social networks, explanation. Community celebrations like religious holidays, bereavement, funerals, and other rites of passage are cornerstones of many societies. Proactive planning ahead of time, including strong community engagement and risk communication, is needed to better understand the issues and concerns of restricting individuals from participating in communal practices because they are being shielded, meaning interned in a camp. Failure to do so could lead to both interpersonal and communal violence. No shit. Why is this in the Silver Report? Well, consider this from the 19th century and think about how it reflects and interlocks with what is going on in the world today with the pharma industrial complex. I have the source in the description below if you want to check it out. Drug wars, RFK, FDA, and silver. Consider what is going on today and how the pharma industrial complex is terrified of RFK Jr. being part of the Trump administration. Listen to this. For many years, Great Britain worked within the system to run a three-country trade operation. It shipped Indian cotton and British silver to China and Chinese tea and other Chinese goods to Britain. In the 18th and 19th centuries, the balance of trade was heavily in China's favor. Sound familiar? One major reason was that British consumers had developed a strong liking for Chinese tea, as well as other goods like porcelain and silk. But Chinese consumers had no similar preference for any goods produced in Britain. Because of this trade imbalance, Britain increasingly had to use silver to pay for its expanding purchases of Chinese goods. In the late 1700s, Britain tried to alter this balance by replacing cotton with opium, meaning with hard drugs, also grown in India. In economic terms, this was a success for Britain. By the 1820s, the balance of trade was reversed in Britain's favor, and it was the Chinese who now had to pay with silver. This eventually erupted into the First and Second Opium Wars, where Britain fought China for the ability to import drugs into China, causing much of the Chinese population to become drug addicts, which is exactly the business model that Big Pharma has for the United States and the rest of the world. And silver is one of the linchpins in this whole story. But let's continue with more financial and monetary analysis on this week's Silver Report. There are $160 billion left in reverse repos. This is the home stretch. You can see here, November 7th, $159 billion. There's some math on the next page as to when this finally goes to zero. Here is the math. How it works is reverse repos are replaced by T-bills, by treasury bills, short-term treasury debt. They gradually replace reverse repos. The money goes into the treasury through the T-bill sales and then into bank reserves. So we have here, I highlighted April 23rd, 2024, when reverse repos were at $436 billion. And I have highlighted the net issuance of treasury bills since April 2024, and that is $123 billion of net issuance of treasury bills, short-term debt. So since April 23rd, remember back here, we were on 160 billion, and in April we were at 435 billion. So 435 minus 123 is about $300 billion. So we're at even lower than that now, 160 billion. So I think we need maybe about 100 billion, 150 billion more in total net treasury issuance for November in order to zero this out. And once that happens, bank reserves start to fall, and we will hit the next banking crisis possibly around or slightly before Trump hits office on January 20th. Was there a silver smash this week? No, not really. All commodities fell together, and silver fell slightly less. You can see that here because we are at a major high or resistance in the silver to commodities ratio. We have 3 touches here. We count this as 1 generally, but you can see that it was a major resistance zone even back in 2011 and 2012. The only time since then that we went above it was during the 2011 high over here. That was when silver hit $50, but we're right around that right now. And we hit it here. We hit it twice a second here during the 2016 top. And over here, this I'm not counting because it was influenced by the lockdowns, which are entirely artificial. But we're at this major resistance zone right now, and silver to commodities is looking very strong. It's all commodities that were hit down on the risk on day after Trump's election that will reverse itself when we go back into normal times in the next few weeks. 10-year yields. What's happening with 10-year yields? They just hit an intermediate trend line. You can see here that they've been having lower highs and lower lows since around October of 2023. This is probably going to break through, and we're going to see higher yields on the 10-year and 30-year, the long-term rates. And this follows the 25 basis point cut made by the Fed yesterday. So that is going to normalize the yield curve between the 10-year and the 3-month. And typically when we have a renormalization after it's been inverted for so long, we have a Keynesian-style recession within the next 3 to 4 months, or possibly even sooner. The reason I think that the 10-year yields will break through the intermediate trend line is because the 30-year yield already has. It's broken through its intermediate downtrend line since October 2023. You can see here that it's now above it firmly. We'll see what happens to longer term yields, but they will head higher as we head closer to a financial crisis. And I think that will be the final financial crisis. Speaking of the Fed's rate cut yesterday, we have the 10-year to the 3-month yield curve almost normalized. As I said before, we're at a high of only 6 basis points here. That's 6 basis points just below zero. This could normalize any day now that the cut has taken place. It could be any week. It's going to be very soon. And once it does renormalize, we are headed straight for a Keynesian-style recession, which will be accompanied by a financial crisis, as I keep saying. And so, yes, we had a risk-on day that brought down the prices of gold and silver, but it brought down the prices of all commodities. So it's all commodities that are really being suppressed, whether you want to blame that on manipulation or not. And I view the entire futures market complex as the main manipulation, as in the practice of selling more futures than commodities that physically exist. It's not just in gold and silver, but in the end, as the dollar collapses along with all the other currencies, which are derivatives of it, it will be the commodity complex that rises the fastest. Commodities will rise faster than any other asset, and the fastest commodity to rise, or the commodity to rise the fastest, will be silver, followed, in my opinion, by gold. And that's why the prices of everything will fall in terms of precious metals, and we will be in a new endgame, hopefully, with a much weakened pharma industrial complex. At least that much we can hope and pray for. This is Raf of the Endgame Investor with this week's Silver Report for the Endgame Investor, and I'll see you guys next week.